All right, welcome back to Is the Bottom In? Today, we're diving deep into Moderna, ticker MRNA. This stock has seen some wild swings, especially post-pandemic, leaving many of you wondering, is the bottom truly in for this biotech giant? We've crunched the numbers, dissected the scenarios, and we're about to reveal exactly what our analysis says. So, what's the buzz on the street about Moderna? The market narrative right now is all about navigating a challenging post-pandemic world. We're seeing sharply declining COVID-19 vaccine revenues and, frankly, a pretty seasonal business model now. While management is doing a commendable job with aggressive cost-cutting and they've got a strong cash position of about $7.5 billion, there's a big question mark. Explicit forward revenue guidance is pretty much absent. This leads to a ton of uncertainty around future sales. Our deep dive suggests the market is currently pricing in a stabilization of product sales around $2.8 billion for 2025. Before we get into the nitty-gritty, let's quickly recap what Moderna Inc. actually does. These guys are a biotechnology powerhouse, discovering, developing, and commercializing messenger RNA therapeutics and vaccines across infectious diseases, immuno-oncology, rare diseases, and even cardiovascular and autoimmune conditions. Think COVID-19 vaccines, flu shots, RSV, and a whole pipeline of other potential game changers. They're headquartered in Cambridge, Massachusetts, and were founded in 2010. But here's the catch for us. Officially, they've been pretty quiet on explicit forward revenue guidance, which makes our job of forecasting a bit more interesting. All right, let's break down the scenarios. Since Moderna isn't giving us explicit forward guidance, we've had to reconcile the market's implied expectations with what we know about the company. The market's current valuation essentially bakes in product sales stabilizing around $2.8 billion for 2025. This gives us our starting point. First up, our base case, which we're giving a 40% probability. This scenario assumes those product sales in 2025 stabilize right around that $2.8 billion mark. This isn't just a random guess. It aligns with what the market's current price-sales ratio implies. We expect a seasonal rebound in Q3/Q4 of 2025, plus contributions from new respiratory vaccines like RSV and flu, helping offset the drop in COVID-19 sales. Management's aggressive cost-cutting should also help maintain some profitability. To get to our fair value, we took that $2.8 billion in projected 2025 revenue and applied a forward price-sales multiple of 3.23x, which is roughly its current PS. That gives us a projected market cap of $9.04 billion. Divide that by 389.2 million shares outstanding, and we get a base case fair value of $23.23 per share. Why 40% probability? The stock's technical consolidation around the current price gives us a neutral backdrop, but its position at the lower end of that range slightly reduces our confidence in it as a sole outcome. Next, let's talk about the bull case, coming in with a 25% probability. For this optimistic view, we need mRNA to successfully diversify beyond COVID-19. We're talking strong adoption of those new RSV and flu vaccines, a more robust seasonal rebound, and better-than-expected pipeline progression, pushing 2025 product sales to $3.5 billion. If that happens, and with enhanced cost controls, the market would likely get much more confident, leading to an expanded price-sales multiple. So, for the numbers, $3.5 billion in sales times a more optimistic 4.0x PS multiple gives us a projected market cap of $14 billion. Divided by shares outstanding, that's a bull case fair value of $35.97 per share. Why only 25%? Our technical analysis shows the stock in a holding pattern, and a break to the upside would require a really strong catalyst, something that isn't clearly on the horizon right now. Finally, we have our bear case, which we're assigning a 35% probability. This is where things get tough. This scenario assumes that mRNA's revenue decline continues more severely than anticipated. Maybe those new respiratory vaccines face stronger competition or just slower adoption, failing to offset the dwindling COVID-19 sales. That would push 2025 product sales down to just $1.5 billion. Persistent losses and cash burn, even with cost cuts, would erode investor confidence, compressing that valuation multiple significantly. So, $1.5 billion in sales times a compressed 2.0x PS multiple leads to a projected market cap of $3.0 billion. Divide that out, and our bear case fair value is $7.71 per share. Now, why 35%? This is crucial. Our technical analysis strongly supports this scenario, showing the stock is near the lower boundary of its consolidation range, around $24. The current price being just below this $24 level dramatically increases the likelihood of a further decline if that support breaks. So, while our base case has a slightly higher single probability, the strong technical fragility means we're assigning a significant weight to the bear case due to the clear downside risk. All right, let's pull up the chart. Here's what I'm seeing based on our technical analysis. After a significant downtrend, MRNA is now in a pretty clear holding pattern. It's consolidating between $34 on the upside and $24 on the downside. It's essentially waiting for a catalyst to push it decisively in one direction or the other. But here's the kicker, and something to really pay attention to. If it breaks down below that $24 support level, our analysis suggests it could go as low as $14. That's a serious drop from here, folks. So, if the bottom in for Moderna? Based on our weighted average of these scenarios, factoring in a 40% probability for our base case at $23.23, a 25% for the bull case at $35.97, and a very significant 35% for the bear case at $7.71, our weighted average fair value comes out to approximately $20.98. Given that the stock is currently trading around the lower end of its consolidation range and our technicals show significant downside risk if that $24 support breaks, my verdict is that the bottom is not definitively in. There's substantial risk of further declines, and you really need to be cautious here. Given our analysis, if you're looking for potential entry points, you need to be very patient and look for significant weakness. Our bear case fair value is $7.71, and our technicals suggest a breakdown below $24 could lead to prices as low as $14. I'd be looking much closer to that $14 level or even lower if the $24 support truly collapses. Aggressive investors might consider small positions around 14, but frankly, waiting for more clarity or a stronger technical reversal is probably the smarter play here. That's our deep dive into mRNA. If you found this analysis helpful, do me a favor, smash that like button, subscribe to the channel, and hit that notification bell so you don't miss our next episode. And let me know in the comments below, what do you think about Moderna? Is the bottom in for you? Remember, this is not financial advice. I'm not a financial advisor. This content is for educational and entertainment purposes only. Investing in stocks involves significant risk, and you could lose money. Always do your own due diligence and consult with a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.